Alright guys, welcome back to MMGinvest and WolfPack Cryptos. I just recently uploaded a video on Bitcoin and the cryptos and their massive pump. It's pretty much still in play. I will likely make another Bitcoin crypto video later tonight because there was some news with SEC. And you know, I'm going to keep covering the price volatility because there's a lot of people who are checking out YouTube videos, and now's the time to make videos so I could grow my audience. But my thoughts on Bitcoin are still the same. In this video I will be covering the markets, S&P, equities, gold. So first of all, equities are extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. I'm not a financial advisor. Consult your financial advisor. Have your emotions out and your stops in. So, not much has been happening this week in the equity space and stocks. So I haven't really made a video. And let's take a look at the S&P real quick. Where is it? So, you guys need to understand something. I don't really care if the stock market goes up or down. Here's the S&P 500 weekly time frame. So I do not care if the S&P makes all-time highs or if it starts dumping again. It really does not matter to me, because this is how simple it is. This is my strategy, and this is my theory, my thoughts and opinions. Can they be wrong? Absolutely. But this is what I am doing. So, hold on. There. So, I don't care. Whatever happens, I'm gonna make money. If the S&P 500 breaks out, starts making all-time highs, and we go to, you know, 4,000 on the S&P 500, if we go to 3,000, I don't care. If the S&P falls to 2,300, I don't care. I'm gonna make money either way by holding one position, and that is gold and silver mining stocks. Why is that? If the S&P, if the stock market breaks out and starts making new all-time highs, it is because they're cutting rates. Cutting interest rates, and the Fed cutting rates again, is printing more money. If the stock market falls, what are they going to do? They're going to cut rates and print more money. That's what's going to happen. It doesn't matter what happens from now on. Whatever they do, the Fed prints money. I wish I could throw a picture of like them printing money, like right here and right here, and that's it. That's all I care. Like I don't care if it goes up or down. So let's take a look at gold. By the way, I mean, for technical analysis, you see these yellow bars? Yellow bars? This is an indicator I use. That's telling me it's overextended and we're due for a correction. That one indicator alone. And it, you know, back testing it, it's pretty accurate. Look at this. Pullback. Slight pullback. Green candles, pullback. Yellow candles, pullback. And you see the blue candles, That's signaling a buying opportunity. Buying opportunity. Buying opportunity. But now we have yellow candles. I expect a pullback. Just looking at that alone. Let's throw up my TD indicator. Now, yes, on the weekly, we're on a 3 count. And 3 count, we have 1, 2, 3 count, all candles trading above the body of the prior. That is pretty bullish on the weekly. If we take it to a 3-day chart, we could come up on a 9, perfected 9 in the background in the next few days. By the end of this week, today's Wednesday. So I would not hold anything long, bullish, over the weekend. It's too risky. Here's a daily chart. Daily's on a 5 count. So 6, 7, 8, 9, 4 more days of upside. So by next week sometime we could expect a pullback at least. Let's go to a 12 hourly. 12 hours the same. That's weird. 4 hourly. 4 hourly on the S&P 500 is coming up on a 9 count. So tomorrow we could see the beginning of the pullback. And that would be Thursday and Friday. Friday, I don't think anyone's going to hold over the weekend. It's too risky. So I expect the correction to start either Thursday, Friday, or next week, sometime soon. Let's go back to the weekly. Here's the weekly again. Let's look at the indicators, the oscillators. RSI extremely overextended. Momentum indicator, it's overextended still. OBV overextended. TM squeeze overextended. MACD overextended. Or I don't like this MACD. Let's use this one. MACD, well, you could say it's neutral. It could keep running higher. But this is the weekly. When the RSI is overextended on the weekly, I mean, it's overextended, okay? So I do expect a sell-off. Even if it somehow makes an all-time high in the S&P 500, it's going to pull back right afterwards. So far we haven't. And this is called a broadening top because the all-time high, it's not far off. It's really not far off. But, so, you know, you can look at it as a broadening top. If we make it to the all-time high, it might pull back then, and then it's a double top, which are rare, but they do happen. So I would watch out. I wouldn't short the market. I never say to short. Honestly, guys, I don't short much. I like to buy inverse ETFs. Here's the SQQQ. It's coming up on a 9 buy signal. This would be what I would be shorting the market with. Or my long-term positions, most of my account is in gold stocks, right? Where was I? Let's take a look at gold. So, gold is holding on barely. Because if you look at this, here's a shoulder, here's a head, and here's another shoulder. So this is pretty much a head and shoulders. Usually what comes after head and shoulders is down we go. Will that happen? I don't think so. Because we also have, if you put in the trend line from this neckline, it's slightly higher lows, slightly, but it's close. It's a close call, right? And the banks, well, they come in and smash it probably. They see the same pattern. But if the market starts pulling back toward the next few days or next week, then gold might actually start rising back up again, and it'll ignore this head and shoulders. So head and shoulders will give you like a 70% probability, right? Looking at the oscillators, I've got a buy on the MACD. Momentum is neutral. RSI, it's starting to trend back up. And this is a daily. Let's take a look at the weekly again on gold. So it did cross to the downside, the MACD, which I was worried about. Like I started worrying about that a few weeks ago. Whatever happens, we do not want to see gold go below 1200. That's devastation for gold. Again, though, we're coming up on a golden cross next week in gold. And this is what I was talking about a few months ago. Hold on, let me go to another chart here real quick. Where is it? Let me do this. So here's a weekly chart again on gold. And you see this cross right here? This is bullish. The 200-week moving average is going to cross my blue line. That's a huge golden cross. The last time it did that, let me take away the heat map. There we go. Let me take away the TD indicator. There we go. So you can see better. The last time the 200-week moving average crossed my blue line, my blue equilibrium line, was of June 2003. That was the last time it crossed it to the upside and had a golden cross. And what happened after June 2003? What happened since here? Let me draw. What happened since here? Boom. The biggest bull market in gold in history. Will that happen again? I think so. Can I be wrong? Sure. If the stock market crashes, will gold crash? Probably short term it'll crash because people are going to sell everything, including their gold holdings. But then again, it might not, because people know that gold will rally because of the Fed will capitulate and start the printing presses back up. So we have another golden cross, the 200-week moving average of my blue equilibrium line. And this hasn't happened since 2003. And nobody knows this. Like, nobody talks about this. No gold bugs, no analysts. If any YouTube analyst talks about this, it's because they're watching me. And that's why I'm so bullish on gold and metals. That's why I'm going to buy more. So I'm just going to keep dollar cost averaging in. And not just that, the Fed is capitulating. I just posted, where? Like, look at the stuff that's happening, guys. Trump versus Powell, the Fed chairman, battle over rates and stocks. Trump's like, we need to keep printing. And Jerome Powell's going to say the same. They're both on the same team. They both want to keep printing because they know if they stop, the stock market's going to fall. And the last thing they want is the stock market crashing. Because if it does, the next time it does crash, it can't recover, like ever. And if it does, they have to print like tens of trillions to get it back up. And at that point, we're in stagflation, like a depression where people are losing their jobs and the prices of everything is exploding, like food. And the public, the masses, the sheep are actually, they will not be able to ignore this. You could even have rates going up at the same time, which would be the worst thing humanly possible. Let's take a look at rates real quick. Now, if the Fed cuts rates, this inverted yield curve will uninvert, meaning the shorter term yield on the short term bonds will actually start falling again, and we will no longer have an inverted yield curve, but the entire interest rates, all of them, for all the time, for all of the maturity rates from the 30-year to the 1 month, they're going to rise and rise higher together, but the yield curve might not be inverted. It doesn't matter, and that's because of manipulation by the Fed, because if they start cutting rates, they will uninvert the yield curve, but that doesn't mean that we're still not going to get a recession. It just means that they're cutting rates again back down to zero, or they might go negative. Eventually, it'll invert despite what they do, but for the short term, they could stop the yield curve from inverting if they cut rates. And then it'll confuse the markets, and then they will just keep buying stocks, and we'll get a blow-off top in the stock market. And I don't care. Like I said, guys, I don't care if the stock market goes to all-time highs. Gold and silver stocks should be going higher and higher because they're cutting rates. It's that simple. And if it doesn't, if gold and silver, let's say, sells off again, it goes back down to 1,200, I don't care. I'm just going to buy more. You shouldn't be, if you're trading leveraged ETFs, then you should be very seasoned trader, and you should know what you're doing, and don't complain or have emotions. I don't care. Like, at that time, if you're doing that, then you know what you're doing, and you understand what I'm saying. I don't care about the short term. If you're buying stocks, you shouldn't be buying them on leverage, and you'll be fine. It doesn't matter if they drop 10, 20%. Who cares? It's the long-term perspective that matters when you're buying gold and silver stocks. Because, you know, it fluctuates here and there, 10, 20%. And then all of a sudden, 6 months from now, a year from now, it'll explode like hundreds of percent to the upside. Because the downside risk on metals, mining stocks, I don't care. It can't be much. It can't be much. All right, so here's the FANG stocks. There was a inverse head and shoulders. But if you guys remember, I did ride this from that all-time low. I bought that dip in the Russell, in the QQQ, and the NASDAQ, and I rode it up to this support right below the 50% Fibonacci resistance. And this is a the FANG index that I'm looking at, daily chart right here. And right now we're right above the 38.2% Fibonacci on the FANG index here. But I'm expecting a pullback, and if the FANGs pull back, at least to the 50, we should get a decent sell-off on the S&P 500 and everything else. Also, looking at the Russell ETF, here's the Russell ETF. This is a monthly, and the monthly is neutral. Let's take a look at the weekly. Here's the weekly. The weekly is also slightly bearish because RSI, and it's bearish but neutral. And I like to look at the Russell to let me know if this market's going to go higher. Right now, it's in a no trade zone. Or if you're still holding, you might want to take profits, right? This entire area right here in the Russell 2000 is very neutral to me. Between 148 and 157. Very neutral. It could go either way. So if the Russell breaks down, I expect the market to break down. If it breaks out, I guess we're going higher. And it's all going to be, you know, they keep saying that the trade deal's close, it's good, it's going to be great. And, you know, they might make some BS trade deal and the stock market goes higher and we get to all-time highs. Or maybe the market will ignore it and it'll be buy the rumor, sell the fact, right? Because they've been talking about this trade deal for like a year now. That's going to turn out great. So it might be buy the rumor, sell the fact. When the trade deal does happen, everyone might take profits, right? And I would. I mean, this run's been pretty epic. It has pulled back a little bit lately in the past few weeks. So I'll keep my eye on this. Inverse plays, I'm looking at them. Also, you know, if gold does break out again, I am in the MMG Elite private group. I'll start posting some of the leveraged ETFs when I do play them to the upside, because it might be a great play. So that pretty much covers it for this video. I'll make more market updates this weekend. I just want to make a short video for now to keep you guys updated. Yeah, and stand by for... I'm going to upload a trends video. I don't know when to do it. I made it over the weekend. Also, stay tuned for cryptos. I'll probably make another video tonight. And... yeah, there's a bunch of video ideas I have that you guys might like. So smash that like, leave something, anything in the comment section. It helps my videos. And please share them. I really appreciate that. It's the only way my channel grows. And if my channel stops growing, I'll probably stop doing this. Until next time, guys.